Sun International's first half diluted adjusted headline earnings per share rose 37% to 294 cents. The group's revenue was up 9% to 4.7 billion rand, while operating profit grew 20% to 905 million rand. The results include a realized surplus of 24 million rand from the Sun International Benefit Fund as a consequence of the fund's closure. An interim dividend of 90 cents per share was declared. Don't want to go back to the headline earnings per share, adjusted headline earnings per share. We'll leave that debate behind. Sun International, drill through these results for me and tell me what your overall impression is.
Sun International, I think, is struggling. The occupancy was down, okay, and that's quite important.
At 65% occupancy for the overall group.
Down about 3%, I think. Basically, they're different operations, whether it's the boardwalk or the thing, had different, I think you had different
challenges.
Different challenges in all of them. I think the difficulty is that the economy is not really supportive of some of the kinds of hotels that they've got. I think something like Table Bay.
Occupancy there at around 41%, which is very low.
Which is not, I think that would be difficult to maintain profitability at that level. I think it's only cabinet ministers that can afford to start that. I'm
going to forget that jibe at the politicians. I'm moving on to Owen because of that. You wrapped over the fingers, Julie, Chris Hart. Let's talk about this occupancy level. 65% across the group. Is it satisfactory in your opinion?
Not at all. I mean, the hotel industry is definitely still in a bad space. We went out during the World Cup, built more hotels, built more boutique hotels in your corner, and the guys at the traditional hotels also increased their hotel rooms. But after the World Cup, what happened? There's not enough events to take these guys through occupancy ratios of above 70%, where I think they could start to be making some cash. It's definitely not impressive. I think that's a space that will remain so until the next foreseeable.
The situation exacerbated in Cape Town. I want to go back to Table Bay with that occupancy level of 41%. We've got excess supply post 2010 in that environment. How long is it going to take to work its way through the system?
Yeah, I think it's difficult. Because of the excess capacity, you notice, but even outside South Africa, in Zambia, for instance, the occupancy is also hovering on just north of 40%, but in Nigeria it's above 60%. And that probably is
That's at the Federal Palace.
Yes. And so they've got quite a nice footprint, and I think the South American operations in Chile is also doing quite well. Right, but the South African, their core, in other words, where their home is, they are struggling.
Looking at inflation or above inflation cost increases, that has obviously reduced EBITDA margin by some 1.4%, under pressure, and we're not going to see any let-up in cost increases. Just looking at electricity, specifically mentioned in Botswana, the electricity increases that they've seen in that territory.
Yes, definitely going to continue to give challenges to the group. I think the only people that will be buying stocks like these will be people who've got a relatively long view of things, maybe 10 year ahead. You can get involved in these stocks at these levels, but you're not seeing quite a lot of volume go through this name. And for example, today, I think the market didn't react in a massive way in terms of volume. It's just a space that most people choose to rather stay away from. And all those challenges you're mentioning are just causing investors to stay away from the business in more.
Administered price is a big problem on this front for you?
It is a problem, but I think the bigger challenge could well be the gaming side. It hasn't proved to be as defensive.
It used to be defensive.
It used to. But I have a feeling what has happened is that they're not growing that market, and I suspect one of the reasons is that their churn rate, in other words, losing customers, in other words, your seasoned gamblers, I think, are starting, or they're leveling off. They're not able to track things, because I think what's happening is that the casino experience is not as great because of higher taxes and the need to actually grow revenue. So it's not. Let's put it this way: taxes is killing the industry. The government's also looking for a broader footprint in terms of empowerment, using casinos, and Sun International is quite dominant, etc. So if anything, they're going to see a little bit more competition, especially if licenses are increased in the provinces, needing to try and raise additional tax revenues in a market that's fairly static at the moment. I think this is an area that's not as secure as it was, say, a few years ago.
Weakening rand and a weakening Chilean peso against the US dollar both added to the revenue momentum on this one. So they are susceptible to a volatile exchange rate. You don't want to see it go the other way.
Yes, definitely. I mean, there's a benefit there for about 6 to 7 million rand in the numbers from the currency. But if your next question is going to be, am I keen on the stock or not? You know what?
We're not done there yet. I still want to drill down into more detail.
Yeah, it's definitely you're seeing these forex benefits come through for them. That global exposure, in a way, coming through. But that's not what their main business is.
If you were running Sun International with the scenario that you've painted, the gaming not defensive, you've got this excess capacity in the hotel industry, especially at the upper end of the market, what would you do?
I would be looking to, firstly, upping the occupancy. I think that's absolutely incredible.
What, by dropping costs?
It may actually be by maybe segmenting a little bit more. In other words, to actually have more
of a diversified option.
Exactly. All right. They tend to go for the the more exclusive kind of thing, and unfortunately, economics have excluded people, and that's why they're struggling with occupancy, I think. And I'd be trying to diversify the gaming industry, at least to the other, in other countries, to actually be doing that. I'd be very careful of the currency gains, because that can easily turn against you quite quickly. In other words, volatility this time round was in your favour, next time round might not be in your favour. In other words, it's pretty much a lottery, whether it actually favours you or not. And that would also be something I would take actually and put in a special reserve, if anything, to actually say any currency gains, if you have gains, to put it away for future losses.
Just looking at the Federal Palace, before we go to hot or not, in Nigeria, you mentioned the occupancy rate there. It's pretty much at the high end of the group at 65.2%. Would you look for more Nigerian exposure, Owen?
Definitely Nigeria is one space that most of the South African players are getting involved in across the platform, whether it's in retail or, I think that's one way of trying to get room rates to improve. But the challenge for this group is that they've got so much capital expenditure that they've put into the business, hoping that it's going to pay out down the line. But now that's not the case. And I think the near-term view, say 5 years, doesn't seem so great in my view. I'll probably be considering to maybe get rid of some of these assets that are underperforming. But who would be the buyer of those assets?
There was a big but there.
Exactly.
Who would be the buyer of those assets?
Yeah.
Well thought through. If you were running Sun International, we've got a PE of 18.54, dividend yield of 2.34%, and we've got a market cap of almost 9.5 billion rand. Hot or not in your book?
Sure. I think this is a good company, but not a great investment at this stage, if that makes sense.
Hot or not, Chris?
So
it's black and white.
Not hot.
Not hot. Owen?
I'll go sleep at a boutique hotel down the road. Definitely not hot.